can get the results for the research paper?
I mean, I haven't gotten them yet, so I'm soon writing. Yeah,
Thanksgiving?
I don't know. It'll be some, yeah, it will be after Thanksgiving. You can guarantee that. I'm going to Disney World on Saturday.
Oh my God.
No.
You sounded so
Is that
excited.
the one in Florida or?
Huh?
You paid to.
I'm going to the one in
I think I
Florida.
went to old and go to like 18.
I love Disney World. That's where I went on my honeymoon.
I went as a kid, into like, I don't remember it.
Because my
I've never
mother
been
was
in
like 10 years
New
old,
York.
there was like so much.
Yes, but my in-laws are keeping her, so she's not going to the park. Just the.
I don't think you enjoyed it the right way.
So, no, I'll not be grading your research papers over Thanksgiving
Just give
holiday.
it to Mickey, maybe he knows.
Probably not at least. Okay. I'm gonna do it at the beginning of the week that we come back though. I probably will do it then. So, let's look at a problem. Let's look at problem 59. For the year ended December 31st, 2015, Maple Corp's book income before federal income tax was $100,000. So we have book income of $100,000, and now we want to get to the taxable income. So we want to know if any of these items here are things we have to take out to get to our taxable income. Take out or put in. The first thing we have is our provision for state income tax. Do we need to make any adjustment for that? We need to take it out. Anybody disagree? So, but isn't income tax treated the same for federal purposes as tax purposes? Yeah, it is. Yeah, you can, for federal law, you can deduct state income taxes paid, right? But you cannot deduct federal taxes. Right, I guess I'm a little confused. So if we're starting out at our book income and we're trying to get to our taxable income. So for book income, we're definitely going to deduct our state income taxes that are paid. For our tax income, we also get to deduct our state income taxes. So basically, we have no adjustment for state income taxes because it's reported the same way for book income as it is for tax income. Does that make sense? Okay. Interest earned on U.S. Treasury bonds, is that reported the same way for GAAP as it is for tax?
Because it's US Treasury bond, there's no adjustment.
That's right, there's no adjustment. That is absolutely right. You only make an adjustment for state and local bonds, not for federal bonds. Tricky, tricky. We have interest expense on a bank loan to purchase the U.S. Treasury bonds. Is that treated differently for GAAP than for tax?
No.
That's right. No, it is not. You still get to deduct that interest expense for GAAP and for tax. Now, let's say, what if instead you had interest earned on municipal bonds?
Then yes.
Then yes, we would have to take that out of our book income number. What if this loan was interest expense on bank loans to purchase municipal bonds? Do you still get to take that deduction?
No.
No. So that would have to be added back. Okay, if it had been for municipal bonds. Okay, 65. For its taxable year 2015, Roger Corp had net income per books. So we have book income of $80,000, which included municipal bond interest of $5,000. Is that going to be an adjustment? Okay, is it going to, is it increase or decrease?
Increase?
Right, decrease. Okay, because it is, municipal bond interest is not included in income for tax purposes. So we have to take it out of our income for books, because it is included for books. Okay, now we have, dividend income of $10,000. So we have dividend income, $10,000. Any change for the dividend income? No, no change. It's the same. Okay. A net capital loss of $6,000. Is this going to produce an adjustment? What do y'all think? Is this gonna be an adjustment?
Temporary adjustment.
Yeah, some adjustment.
Yes, it will be an adjustment, okay? Because book income has a $6,000 deduction for a capital loss. How much is gonna be allowed for tax purposes?
To extend capital gain.
None, right? To the extent of capital gain. And this is a net capital loss, which means we've already taken capital gain into it, right?
Yes.
So none of it. So was this going to be an upward adjustment or a downward adjustment? Upward, right? Because you do not get to take that deduction. A deduction for business meals of $4,000. So we have meals, $4,000. Is this gonna be an adjustment?
Yes, $2,000.
$2,000, right? Is that up or down?
Down.
You think it's down? It's actually up. Because,
Oh, you add the two that you didn't?
right, book income includes that $4,000 of deduction. The tax you only get $2,000. So we have to add back that excessive $2,000 that you do not get for tax purposes. So increase. Okay, a deduction for federal income taxes of $18,000. So federal taxes of $8,000. Is that an adjustment?
No. Can't do that.
So you're right, you cannot deduct federal income taxes for tax. So does that mean it is an adjustment or it isn't? It is an adjustment, right? Because that's what we're trying to do, is get to our taxable income number. So is this going to increase it or decrease it? Increase it, right? Because it is allowed as a deduction for book and is not allowed as a deduction for tax. Okay? All right. So if we look at question 71, so this is a question about an M2. So with this, we want to determine what's on the last line of reconciliation for an M2. So the last line of reconciliation for an M2 is basically the retained earnings balance at year end. Okay? So we will start with our retained earnings at the beginning of the year of $50,000, right? What are we gonna do with our net income? Are we gonna add that or subtract it? Add it, right? Also says that we have a contingency reserve established at the end of the year, which we'll subtract out. And we have an $80,000 or $8,000 cash dividend, which we subtract to get our retained earnings at the end of the year, $102,000.
That's all.
That's it. Okay. Now let's look at the simulation that I printed out. it says simulation 3 on it. It's
Simulation 2 or 3? Yeah.
3.
Two, yeah.
Yeah, don't do, we're not gonna do 2. Decided to skip 2. We're gonna do, just do 3. So I want you guys to take a minute to read through the facts for tax-based simulation 3, okay? I forgot to hit record. No, wait, no, it actually is recording this time, never mind. It actually is recording. Okay. Okay, so let's take a look at this problem. We start with our line 1, net income loss per book. So what needs to go there on that line?
Net income.
310,000, right? Okay. Now, we have our federal income tax per books.
We add 104 and 50.
Exactly, 104, 550. 104, 150.
Yes.
Okay. Excess of capital losses over capital gains. Do we have anything we need to put there?
We do not. Yes, 7,000.
Previous
That is all 14. It's just the year that I had before, $7,000. Okay. Okay, category 4. Do we have anything that's gonna fall under category 4?
Interest income? Maybe
Interesting.
from municipal general obligation loans.
Okay, so that does go on there, but not right there. So what about travel and entertainment? Do we have anything we need to put there?
Yes.
Yes, employee entertainment expenses reimbursed.
6,000,
So
right?
it's gonna be adding back 3,000.
Okay, so we're gonna put $3,000 here. Now, for expenses recorded on books but not deducted on the tax return. So we wanna look at this and determine, are there any expenses that were deducted for GAAP, but are not going to be allowed to be deducted for tax? So I'll tell you what it is, because you may not know it's the rule. Premiums paid on policies for the president. You cannot deduct premiums for insurance policies. So that is not allowed as a deduction.
Where do we? That's line 7.
It's actually like this little blank, this other blank, because column 5 and actually 4 have that line, that blank line under it. That's basically for you to.
That's 6, right?
Yeah, 5.
It's fine. Fine.
5. See, for 5C, we have $3,000 for travel and entertainment. And we also have premiums, which you would write out in the line next to it of $5,000. Okay?
No, if there's more than one, what would you?
If there's more than one, you would say
Attach.
see schedule,
Okay.
and you would attach a schedule to the return. And that's a great question, because you will have some of those on your actual 1120 assignment that you would need to attach a schedule. Don't just put a bulk number and expect me to know what it is. Okay, if you have more than one, which very often happens with an M1 because you don't have a lot of blanks, right? It wouldn't happen on an M3, but it does happen on an M1. And you would have to just put a schedule at the back, put a Word document. You could, some students last year, just wrote it on a piece of paper. That's fine. Okay, so that gives us a total for 5 of $8,000, which gives us at the bottom line 6, we have $429,150. Right? Okay, because we are adding back these numbers. Now, if we go over here, we have tax exempt interest. Do we have anything here that has to be subtracted out? What do y'all think? $20,000. Okay, that was included in income for book, but is not included for tax. Do we have any other items listed that are included in income for book, but not included for tax?
Dividend income?
Insurance proceeds. Dividends are included in income for either. Insurance proceeds are not included in income for tax. Tax exempt. Okay? Which gives us a total for the 7 of 120. Now, what about depreciation? What does it say in here about depreciation? Maker's depreciation in excess of straight line. Hey, they give it to you. You don't even have to calculate it. So that means you have $9,000 more tax depreciation than book depreciation.
So we have to take out 9,000.
That's right. So we're gonna have $9,000 here for depreciation. For our total on 8, we're gonna have $9,000. For our total adjustments, our total increase adjustments, we basically have 129,000, to give us our taxable income of $300,150. Okay, so these are our downward adjustments here, and these are our upward adjustments. Okay. So, let's take a look at, I guess there is one other thing on the slides that I will just mention very briefly. It's on slide 24, the accumulated earnings tax. What this is if the corporation has earnings and they're just sitting on them and they're not distributing dividends, there is a tax imposed on the corporation. It's really more of a penalty. It's 20% is what the penalty is. The 20% of the amount of accumulated taxable income that has not been distributed. Which makes sense. What happens when this income is not distributed to its shareholders? The government isn't getting any tax revenue, right? Because they only get the tax revenue when they become dividends. So Congress said, all right, fine, we're gonna impose a penalty if you don't distribute dividends when you have the earnings to do so. However, there are lots of exceptions, and often the exceptions swallow the rule. That if you don't have to, if you need your current E&P to meet the reasonable needs of the business, and there's also a threshold if, basically it's like 250,000 cushion that you get. But the reasonable needs of the business are pretty broad. You can look at the last slide 28, which tells you some legitimate business reasons and some not legitimate reasons. It is honestly not very difficult to come up with legitimate business reasons to keeping excessive E&P, which is why, practically speaking, this penalty doesn't have a lot of teeth. But you mention it. Okay, so with your 1120, we're going to look at a sample 1120 tonight and help you understand how to do your actual 1120. Okay, so I want you guys to take a few minutes, look over the facts for these taxpayers.
Are Nancy and Dolores really connected?
Are they related?
Yeah.
No. Not that I know of. I've also provided you guys a blank 1120. I was planning on like using the overhead, and, you know, going at it like that, but that's not gonna happen. So, let's just walk through it the best we can, all right? So if we look here at our facts, in my opinion, filling out an 1120 is easier than doing a 1040. There's just a lot less things that you have to worry about. You're really just looking at business income minus your deductions, and then your M1 or your M3. It's not really all that complicated usually. If you have a lot of corporations, and they're in a big consolidated group, and then you have all these pro formas, then yeah, that's pretty complicated. But just one isolated corporation, it's not really that complicated. So if you look, first of all, of course, when you're filling out the return, you're going to want to make sure you put in all the information for the entity, the date they were incorporated, all that kind of thing. Now, most of the things on the return are very similar to our income statement, okay? In fact, you know, if I was you guys, the first thing you might want to fill out when you're doing your return is the M1. Because the M1 is going to tell you right off the bat which things are different for your income statement than they are for tax, right? Because you're not going to put an income or deduction item on your 1120 that you don't get to take for tax, basically. So if you start out with the M1, if you start out by saying, I'm going to identify all my adjustments and put them on the M1 first, then that makes it very easy for you to go through page 1 of the return and enter in your income and your expenses. Okay? So let's take a look at the M1 first, okay? Let's take a look there. So of course our first line of our M1 is going to be our net income or loss per books, okay? Which here, 332,096, you're exactly right. Now, our federal income tax per books, what about that? That is on 171,904, exactly, okay? So then, we have, if you look down, we have some other adjustments that we're going to have to make. What else do you guys see in here that might need to be an adjustment?
Depreciation.
Depreciation, okay, good. How much depreciation?
40K.
So 40,000 is the amount of depreciation taken for financial or tax? Financial. How much is taken for tax? Look in the first little paragraph here. How much is taken for tax? This is not a class of depreciation, so you guys do not have to calculate depreciation. 45. So what is going to be the amount of our adjusting entry? 5. Excellent. Is it going to be on the left-hand side or the right-hand side? The right-hand side, right? Because you are getting more of a deduction for tax than you are for book. So you're going to get an extra deduction, which is going to move the number down. Right? Okay. What else do you guys think might be an adjustment?
Premiums on life insurance.
Premiums on life insurance, that's right. So premiums in life insurance are not deductible for tax purposes. So where do we want to put that on our M1?
Right side or D. Right D.
Exactly, 5D, right? Which is the number. $8,000, or wait, $16,000. $16,000.
And we need to figure out charitable contributions.
Randy, I'm a little lost, what's 16,000?
Oh, premiums. Premiums for insurance policies.
So now goes underneath.
It's a write-in.
It would be a write-in.
A write-in?
Yeah, it would be a write-in, right? There's one other write-in in that category. So these are items that are deducted on books, but not on the return. What do y'all think? What about loans to purchase state bonds? So you cannot deduct the interest expense to purchase municipal or state bonds because it produces tax exempt income. So you're not going to get a benefit both ways. You don't get tax exempt income from a state municipal bond and take out a loan to buy them and be able to deduct that interest expense. You don't get both tax benefits. You basically only get one, and you don't get to choose which one you get. Okay, you don't have to include it in income when the bond pays you interest, but if you take out a loan to buy those bonds, you don't get to deduct that as a business interest expense. So that $8,000 is also going to be a write-in on 5C, which means you probably need to attach a schedule. You would say statement attached, schedule attached, and you just write it at the back.
So where would we write, would we just write off to the side, statement attached?
Yep, or just right under the bottom on that line, statement attached, and then you would attach a piece of paper that says, statement for 5C of the M1, and you would lay out what's in that statement.
Then you just put the total in that slot right there.
And you just put the total in that slot, that's exactly right.
So you wouldn't put premiums, you would put the statement attached?
I would, because you have two entries, you know, like two write-ins, so, which is common with the M1, because there aren't a whole lot of blanks here. So you would have to, you just say C statement, and then you would put your premiums and your state bond interest as a schedule, right? And it is, on this assignment, you need to do this return by hand. I think I say that in the instructions. The actual assignment is on D2L. I did not hand it out tonight, because last year, when I taught this class, I had two students, I'm not kidding, who got confused which one was the actual assignment and which one was the sample assignment, and they turned in the sample assignment that we did together in class. So, I decided,
Did you
okay.
get any credit?
No, I gave them about 6 hours to try to get the actual one done.
That's a good move by them.
No, they did not get actual
Why did you get credit?
No, they did not. So they were like, well, maybe you shouldn't give both the sample and the actual one out at the same time. That's a little confusing. It says sample at the top. But whatever. The actual assignment is on D2L.
And you said it's supposed to be done by hand?
You need to do it by hand. I don't want you to use any programs. I want you to write it in by hand. You can work with a partner if you choose to. You do not have to, but you can. If you choose to work with somebody, I want to see both names on the return. Do not turn in separate returns, okay? Then I just have to grade an extra return. So just put in one return, both names on it. I want you to do it by hand, okay?
For some of that, like this stuff, like the schedule, is there a name for that schedule, or you just put what's the schedule for?
Yeah, you would just put what it links to. I mean, you would just say, M1, line 5C statement, you know? And then you would say premiums of, what is it?
Insurance.
9,000, 16,000,
8,000.
and then 8,000 of loans for bonds, right? So. Now, do we have any other adjustments? We still haven't talked about a couple. So anything else that you guys see that might need to be an adjustment? How about in line 7, income recorded on books, not included in this return. So we have income on books, but not for taxes. Anything?
State bonds.
Yes. Interest income from state bonds, exactly. So 14,000 is gonna be put under tax exempt interest in line 7. Okay. We've already talked about depreciation, right? Yes. So we've already talked about inputting that depreciation. Where's the statement? Okay, that's what I do. I like to start at the M1. Now what we know is, okay, if we don't have a specific adjustment on M1, we can basically take what's on our income statement and put it on page 1 of our 1120. Now, remember, for tax exempt interest of $14,000, that's not something you're going to include on your return. So you need to make sure as you're going through and making your adjustments on your M1, I suggest making adjustments on your income statement so you know what to take and put on your 1120. Okay? Because remember, this is what we're our income for tax. So we're going from book to tax. Okay, now, what about our, some specific things we should talk about? So we have dividends of $12,000. That's going to be entered in line 4. You can see up there at the top, dividends, line 4. But, line 20 for depreciation. So what number are we going to put for line 20 depreciation? Tax depreciation. In that little stuff up at the top, the little language at the top. It says tax depreciation is 45,000. Make sure you don't put 40, right? Because we made that $5,000 adjustment in the M1. Now, what about our dividends received deduction? Where is that going to go? So if you look at 29B, we have special deductions. See Schedule C, line 20. So let's go to Schedule C, which is on the next page. This is where you're going to input your dividends received deduction. So we received dividends of $12,000 from a less than 20% owned domestic corporation. And that is going to be in the 70% range, which gives us a deduction of $8,400. Okay? Now, if you wanted to also compare, make sure that's less than 70% of taxable income. You would take 70% of whatever is in 28, which is $509,000. So obviously, that's not going to be an issue here. That's not a limit, because the dividends received deduction is much smaller than 70% of taxable income before the dividends received deduction. Y'all see what I'm saying? Okay. It's kind of hard to show it without me using the overhead here. Okay, so our total tax, line 31, what would we want to put for our total tax here? This is our total tax. This means 172.04. What are you guys going to have to use to calculate the tax? Section 11, right, that we talked about very, very early in the semester when we calculated our tax, and you guys went through the whole schedules, you know, this amount of this, and you add it together, and then you have a little filler to calculate your tax. Or, this taxpayer is in the 34% tax bracket. You could just calculate their taxable income by 34% if you want to do the shortcut route. And you get 172.04. Okay?
Wait, can you say it one more time?
Sure. So this taxpayer has taxable income of $500,000, which is in the 34% bracket. It should be. Yes. 34% of so much of taxable income as exceeds 75,000, but doesn't exceed 10 million. So, since we're under 10, our taxable income is under 10 million, our rate is 34%. So 34% of our taxable income here is 500,600 times 34% equals our tax of 172.04. Okay? So we're going to enter our total tax in line 31. So total payments and credits, what are we going to enter there in our total payments? So look at the material up here at the top. How much does it say they paid? $43,750 per quarter. So $43,750 times 4 is $175,000. You would enter that in line 32. Okay, and you'll see this when you pull your actual 1120 assignment, but you do not have to calculate AMT. Okay, corporate AMT, you do not have to do that. We haven't discussed it for one thing, and for another thing, it's about to be repealed anyway in the next couple months. So, yeah. Which is good because I don't really like AMT. Okay, so. And you also do not need to calculate earnings and profits, which earnings and profits don't show up anywhere on a return anyway. If you were doing an 1120 for a client, you would give them an E&P calculation. It's just like an Excel spreadsheet, when you give them their return. But it's not something that is submitted to the IRS. It's not something that's on the return. So you don't need to calculate E&P for this project, okay? Let's see, anything else? Okay, so, and you can take a look, if you look at page 4, Schedule K, line 9, it says enter the amount of tax exempt interest received. Well, we already said it was $14,000, right? And enter the number of shareholders, we have 2. The biggest thing when you're filling out this return is just make sure you read all the lines, see if anything applies here, that you need to fill out. Schedule L, balance sheet per books. This is like the easiest one to fill out. Because literally, all you have to do is take your balance sheet from your books and put it on Schedule L, okay? You don't have a separate balance sheet for tax. That doesn't exist, right? Because for tax, all we care about is your income or your income statement when you're calculating taxable income. But with a corporate tax return, you do have to include Schedule L. It's really just for transparency, so the IRS, they can see what's going on, seeing what kind of assets and liabilities you have moving through. But it definitely is not going to affect your taxable income. And it's the same as what you have for books. So that should be pretty easy to fill out, right? With our M1 and our M2, so we start with we already talked about our M1. With our M2, we're going to start with our retained earnings balance at the beginning of the year, which is what? Look on the back page, 1,272,900. Then we're going to add in our book income and subtract out any distributions. Do they have any distributions? They had $80,000 to distribute of dividends, $80,000. Schedule G is where you put information on your shareholders and how much they own the stock. Part 1 is for entities that own the stock, and Part 2 is for individuals and estates. Here we have individuals. So we're gonna fill out part 2 for Schedule G. 1125E is where we report the compensation of our officers. Here, they are both compensated $160,000 apiece. Which that shows you that on page 2 of your facts. It says salaries, Nancy Trout 160 and Dolores Lake 160. Why do we have to enter this? Because we do have that limit of $1 million per officer. Here, not close, 160. Okay. If when you're entering your assets on Schedule L, you may have some, like, for example, you may have, it says other assets on line 14. Or other liabilities in line 21. You may need to attach a statement, okay? If you have additional information for that, you would need to attach a statement if it includes more than one item. Let's see. Oh, yeah. Another thing, let's see, let's look at. For the cost of goods sold calc. Why can't I find it? Oh, here it is, sorry, kept skipping it. 1125A is your form for cost of goods sold. So I will tell you, you have everything you need in your facts to calculate cost of goods sold. You do have to do a little bit of, thinking about it. They don't give you all the numbers. You have to think about how to get to them. But, and if you look here at this, they give you the cost, or the cost of goods sold, right? That's on your income statement of $920,000. So we put that in line 8. And then it tells you in your balance sheet the inventory at the beginning of the year and the inventory at the end of the year. It doesn't give you the numbers in between for your purchases and your total in line 6, but you can get there. Okay, just think through it. You have the information you need to get there. I think that's pretty much it on the return. Any questions on that? No? Okay, good. So, very good. We'll have your 11/20 assignment is due the Wednesday after Thanksgiving. You will just submit it in paper, not on D2L. There's no Dropbox. Just bring it in paper to me. We also have an 11/20S assignment, which is actually, I think it's due the date you take the exam.
Yeah.
It is due on the exam date. And that is because we are not going to be finished with S-Corps until the last class period. And we will probably end up doing part of that actual 11/20 assignment in class together. Okay? All right. Not all of it, but a part of it. Okay. That's it for tonight. Sorry about all the technical problems.